Okay, let me look at live and turn on monetization. And then I think I've got to okay, and then I've got to pop out chat. And we're going to copy web address, chat, and we're going to take this, pop that in. Okay, and we're going to testing live chat. Okay. I think I have live chat up. Oh, you know what? And I've got to do blending mode method. Blending mode screen. Okay. Let's go over here. We're going to start this up. And we're going to do TrendSpider. Close that. Now the live chat should show up in the upper right. So if you're watching this, the live chat should show up in the upper right. And we're going to hit the thumbs up. Let's see. Yeah. I guess it shows up. It'll show up so people who are watching the replay can see what people say. I guess. I don't know exactly what happens, but ooh, look at that core portfolio. Whoo-wee. That looks good. We're going to get rid of that. We're going to get rid of that. We're going to let's just pull this. Share. Copy. Paste. And we'll put copy image. Okay. And we're going to go back here. Let's see if there's any new insider buys or anything. Jeffrey Ubben still, yeah. Crude oil down at 78. That's probably going to 90. So UCO would be your play. Earnings release. Let's see. I saw Palo Alto Networks was up, but I don't think they have their earnings until today. Yeah, they're up 2% in the pre-market. So it's today they're getting okay, let's say boom. Yeah. 242 and you're at 262. I told you Netflix was going at 450. I think it's coming to this gap at 469. So that's a solid play. Bank of America back up to 30. It's going to get to 30. We just literally one day we broke through that damn. That's a 2.4%. God, candle. Just in the morning. Got your ex-dividend date. There's nothing coming up. I said don't fall asleep on the banks. You know, it really took off. DPST. This one was up 10% yesterday. Open at 56. High of 63. There's your 10%. So XRE was the crazy one. Let's look at XRE. Oh. Oh, what's the real estate one? Spider XRE. Real. XLRE. 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 Because the home builders were going nuts. This one, I mean, look at that gap. Oof, I got to turn on the do not disturb now that I'm on. Okay. That gap. Oof. That's a 1.33% just period move. And the low 35.11, high 36.23. We closed at 35.95. It's overbought right now. So nothing solid there. Your big mover of the morning on the SMCI. We're going for 350 on SMCI. Let me see. My morning portfolio summary should tell me what I've got in SMCI. Seeking Alpha pre-market. SMCI up 14%. Maybe I should have named this one SMCI. The episode SMCI. I probably should. Let's see. Let's edit this. Edit. SMCI up 15% yesterday. Okay. Save. That's a good enough one. Okay. Oh, monetization. Why is monetization off? We want this on. Done. Save. Okay. We'll go over here to home. We'll go to news. Gonna get the news off of Seeking Alpha, but I don't think there's much that I. Baidu CEO cautions on wasting resources to develop AI models in China. Oof. Biggest stock movers today. Oh, this is an article that's good. Target Sim. We'll put this one in. Sim, JD. What Sim? Shows JD up 5%. Arthritic. Biggest stock losers. Zim plunges more than 8%. Shipping is just weak. Buying the strong sections in the market. That's what you want to do. So let's say, okay, we're going to go back. NVIDIA keeps chugging along as Citi maintains buy heading into Q3. Let's see, analyst who also has a price target, 575 price target, said buy side estimates for data center revenue next quarter. Anyway, this one actually looks. I mean, NVIDIA, God, just looks so good. Let me see something. Oh, medications. Log all is taken. Set to rise on soft landing, trade follow through. Yeah. I mean, at some point we're getting a pullback. JD.com, Zim stock slide after massive Q3 loss. Berkshire's move. This is always good. Exits GM. I mean, the insurance investment also divested smaller stakes in Johnson & Johnson, Mondelez, Procter & Gamble, and UPS. Berkshire trimmed its holdings in Chevron, HP, and Amazon. Divestment of Activision stake completes Buffett's merger arbitrage play on the video game maker. I mean, he made a fortune on that. God, he made a fortune on that. Yeah. This is the key paragraph here. And I'll put this in. Okay. That's a good article. Okay, I'm done because I am going to do some scans. We're going to go to home here, have this up just in case we need it. And we'll go to the scanner. And Jason gave me a scanner that might work. I have to test that one. Brokerage holdings, let's see. Move down to scans. Scans. PXD. Target. MPLX. Core investments. Probably everything but Target. SPG. PXD. PXD is on the rise. Woohoo! Covered call ETFs. Nothing. Energy names. Good names. Energy. FANG. PXD. SLB. COP. MRO. ARLP. Okay, let's see. Energy levered ETFs. UVIX. DPST. Let me see if I go into Seeking Alpha and look up DPST. Holdings. Goldman Sachs, Truist. DG. What is DG? Dollar General? Yeah. Daniel, I'll go over Dollar General with you right now. Here is the Seeking Alpha stuff. Hold, buy, sell. I mean, it's just a mixed bag. The quant is what I would probably trust at 1.97. I don't trust that it's not, you look at the charting of it. Look at the 1 year. It's down 50% versus the S&P, which is up 13%. Its financials are fine. I mean, everything about this company is okay. Just the valuation and the momentum. And so if the lower end of the income spectrum is getting hurt, I just don't think that there's a Dollar General and Dollar Store just going to continue to go down. Look at the long term, and you see this is below where it was in COVID. Now it's $121. I am not arguing that you can't trade this one, But from a long-term perspective, your low here is 101. So it never got under 100, but it bounced off that 101 level. And if we just look at the auto fib on this one, let's see. We're going to take let's look at the auto fib. Look at that. I mean, you've got no support down here whatsoever. There's just nothing. So from a chart perspective, your MACD just crossed up on a weekly. You're kind of oversold. I just, in my mind, I mean, do you want to time the bottom on this one? If you want to time the bottom, I don't think that you can, but let's look at the strategy tester. And then we'll go to my 4-hour. We'll turn off the auto fib. 4-hour has you out. I mean, you got a gap here between 102 and 108. It's on its way back. You get a gap up here between 137 and 153. That's a pretty big gap. The only thing that I would say positive for this one is you're respecting that 50-day. So right now you're respecting that 50-day, and it's a positive move. With the algorithm having you out with a 6% loss, you got in here and you endured it all the way down to 101 in my algorithm. Doesn't have you back in. I wouldn't say that 121 is a horrible price for it, just because, I think it's been beaten down. The PE is 12, but this is a discount store, and there have been problems with the lower end consumer. The higher end consumer has been fine. Morning, Chris. Morning, Joe. So I'm not crazy about it. The average target price is 126, and you're at 121. So, I mean, the most recent upgrade to 102. I mean, there's nothing that tells me that this is a fantastic one. You can see insider buys. They're buying a couple $100,000 worth. The director, Todd Vasos, sold $4 million worth at 156. Great move. Great move. These guys are buying at 155 in June. This dude, EVP and Chief Investment Information Officer, CIO, bought $212 worth at 106. Great trade. Great trade. But I don't think you want to time the bottom. I just think these are broken. I'd rather miss it, with a 126 target price. The upside to me is just not there. I think you stick in this market. I don't think you look for what's not working. I think you look for what's working. Maybe some of the beaten down stocks. We talk about Shopify all the time. Yesterday, Shopify had a big day. It's up 1.27% now. You look at the weekly on this one, you haven't even reached the 200-day. So, this is a company that's in growth mode. Dollar General's not. So I think, Daniel, if you want to trade that one, I think you're okay. But in my mind, I just think the risk reward on that one, it's okay. There's nothing that excites me about that, I should say. Okay, levered ETFs. Hopefully that gives you what you want, Daniel. But remember, the number one thing is don't listen to a douche on the internet, and I am that douche. Number 2 is don't listen to Jim Cramer. GE Healthcare. Boy, that's a nice move. At 72, man, this is a great example. I don't think that this one's undervalued. I think it's fair valued. But it's 72, and the top here at GE, this is GEHC, and it was beaten down. It got ahead of its skis. It was one of those things. Average target price 84. I don't think that that's a unreasonable target price. It got up to 87, pulled back. You're 17% below that. This is one that, Dollar General is one that could have inventory problems. They could have a bunch of stuff. So PPI core, so producer price index. Wow. Producer price index was down. Zephan, good morning. Hey, sorry about last night. I hopped on to test. And you guys will notice in the upper right-hand corner, there is a chat. So I'm putting the chat in so that people can see the chat up there. So hit the heart, hit the thumbs up, and then hit the heart, and the hearts will come through. Hearts and mind. You're welcome, Daniel. Always happy to help. But yeah, I would be more apt to stay away from something like that. XPEV. Their earnings came out. They're down 1.29%. QDEL. This one's that's a COVID one. MPLX, Lee. PFF, man. I loved PFF. That was a nice big dividend player for about 10, 15 years. Best Buy, somebody asked about Best Buy before. It's just continued to slide. Down here, didn't have confirmation. You now have confirmation heading into earnings. Rivian, don't fall asleep on Rivian, man. I think that one's coming back. ARKG is SOFI, and SOFI with a cross up. I forgot to go over SOFI yesterday. ESA, Finland. I love Finland. What do you have, like an hour of daylight now, ESA? Do you guys have 24-hour darkness there? I need to come to Finland in the summertime when you have like 24-hour sun. Let's go to the Dow. Daniel, I don't know that I'd get out of it. I'd get out of it on weakness. I wouldn't get out of it on strength. It does have short-term strength. I just don't know. Here's what I would tell you, Daniel. Dollar General, I think it's decent at 120. I think their price target is probably about correct. So I don't know that you have tons of upside, but with Dollar General, you do have some. This is kind of, one of those things is you don't want to chase the bottom on stocks. You want to wait. And if you got in at 103, great, you had confirmation. If you got in at 120, I can't see any day here that you had confirmation at 120. And I think you were trying to time the bottom. It's just not in that steep of a down curve. And COVID was one thing that you want to keep an eye on. If a stock is below its COVID price, something broke. Something broke, and that's where I see this one. You look at something like Cleveland Cliffs. We're not Colgate Palmolive. Cleveland Cliffs, CLF, and I go back to 2020 all the time. This was an $8 stock, and they're a $16 stock. They will be a $20 stock again. This is one that just has done better business. They cut a ton of cost out of their business, so you want to understand kind of the fundamentals of this, and it's fundamental and stuff. So, CPTN, I don't, it's a SPAC, or it looks like it was trading at $100, and now it's $3. Landon, it's hype. You had a reverse split, 10 for 1, just to keep it listed. And it did nothing. So, here's CPTN. They have a $52 million market cap. They're losing $55 million. Let's see. Development of light detection and ranging. It's LiDAR. Get out. That is so super capital intensive. You're losing $55 million. They have cash on hand of $3.87. They only have 15 million shares out there. That's only 30 million. They only got a year. Then you're going to wind up getting diluted again. So the average target price is 14. Ignore that. This was all 2022. That was as they were starting. They just started raising rates in, I think it was February. And a lot of these douchebags probably didn't even have that run into. Look, price target of the reason is February of 2022, they came out with a $22 price target, a $19 price target. And the most recent ones in March and June, they're $4 and $5, and you're at $3. Landon, I'd stay the hell out of it. There's better places to put your money. Don't go for the moonshot. Go for the 10% that you have in Rivian. Go for the 10% that you have in Shopify. Go for the 10% that you have in DraftKings. Go for those 10% in Uber. Don't go for these small cap things that are going to make you, 10 times your money. It's not worth the risk. There's things. Risk reward is a big thing that you need to learn about. That's just shit. I still do it. Look at Sedge. Sedge is one that I bought at $270. It went down to I think I've sold it at $70. So, look at the NASDAQ 100. Atlanta Braves holding. KHC. Lucid, I will not put on a list. But here's the thing. Here's how I know that, it's a good one. SGen, Fang, Siri, G Healthcare, KDP. That's been a nice bounce. You look at KDP. There's a solid company delivering results. Landon, what I don't want you walking away from is, hey, don't ever invest in something that you believe in, but do the due diligence, because it's just, look at Sirius, up 13%. Oof. What happened to Sirius that they're up 13% today? Let's go over here. Siri. It's listening now. There's no news. Pre-market is up 10%. Something happened. Is there a short squeeze going into play? Let me see. Oh, this could be a short squeeze. Let me see. Yeah, Liberty does still own the Braves. Let's see. Okay, let's see why Barron says that Sirius XM is moving. Oh, boo you. Let's see. Oh, Berkshire bought 9.7 million shares. No. Okay, that's why. Okay, that makes sense. And by the way, if you don't know, up in the upper right, and I got to get it a little bit better, but in the upper right's all the chat. I'm floating the chat window up there, so that the replay can see it. Let's see, less than 4 hours. Do you think I should start a position in Tesla or put the money? Scott, Tesla, I'll do that. I promise. Here's the thing. I've got to get going because I did a 2-hour great call with Jason yesterday, and I got to edit that video together. So here's Tesla. I think you're probably getting up to this 242 to maybe 243 area. I think it's going to cover that gap. The question is whether it has the strength to move that 50-day. And right now the RSI is at 66. I've lost more money selling Tesla into strength when it just continues to provide strength. So while I say you probably shouldn't, don't hold me to this. This is, it's oversold. I think there's better places to put your money. I seriously do, but I don't know that the risk reward is there for, if you get to this, 280, 300, you got a gap up here between 280 and 287 that still needs to be filled. I don't know if this rally has the strength to do that. So for me, I'm not adding to it. Again, I don't own Tesla outright. No, I own it in XLY. And XLY just crossed the 200-day. So you do have some type of support. So consumer discretionary is not doing horribly. It's kind of, we're seeing a little bit of a pullback on some of these names that were flying yesterday. Morning, John. But I don't want to say, hey, don't do that one, because it's one of those things. I'm not putting any money into it, but I hate talking people out of it because I have been out of that name more often than not. I'll take a look at the 4-hour algo for you once I'm done with these scans. Philip Morris I won't get anybody into. Union Pacific, it's a pretty good one. UNP. Target, I've already got on the list. USB, CL, Colgate Palmolive. It's overbought, but poof, that one's coming back. 3M, 3M just been beaten down. Applied Materials, American Tower, Intel, Cisco, GM. GM is a cross-up, even though Warren Buffett got out of it. I would not get into that stock. And ConocoPhillips. We have that in our energy, I think. Yes. Okay. Let's go over here and we'll look at Tesla in the strategy tester. Let's see. Tesla. Wah. See, if you were in at 201, Scott, I'd say you're doing great. But I said the button hook's forming, and it did. It dipped down. The algo never got you out. And so you're still in at that 201 buy. And you have confirmation over the 9-day. I bought a bunch. I still own a bunch of that. And I thought $50 was going to be the price. But because they are S&P 500 eligible, I'm holding. I'm just holding. I think it's going to continue to go up. I think that one will be fine. SMCI is the big one. That was up huge yesterday. And we broke 300. So if we break 300 during the trading day today, I think you got 350 in the realm. Yes, target is at 126, Zephin. Target is at 126. Target has completed a bit of a turnaround. I'll go over it. We had the buy yesterday at 110, or it's today at 110, but you ain't getting it at 110. It's at 126. Essentially, they continued to, the analysts continued to reduce their estimates into earnings. Up until yesterday, they were reducing estimates. So it was kind of a super low bar to beat. The reason it's up so much, they didn't just beat the lowered estimates, they beat the initial estimates. So Target might be a turnaround story. I'm still not convinced that I'd like to see. Here's the thing. You're so far down. I'd like to see you get to probably a positive moving 50-day at 141. The valuation is there. I mean, it's a super cheap stock. But you can see they went back up to $2.10 per share. And so the slide that started this, when they reported $2.19 and then said, oh my God, we've got declining, we're going to decline our forecast. And that's what started this. And then they made 39 cents a share and said, we're just getting killed by people stealing stuff. And then they continued on. And then there was the social backlash. But their earnings per share continued to stay up. And last quarter, it was $1.80. And they said, we don't know what's going to happen. I'm still in too. See you, Daniel. I'm still in Target as well. I trimmed some, I think at about like 115. Remember, my purchase price was 111 on this. So I trimmed some at, I think, 115. I didn't add back in. It'll be a stretch to get to 130, Zephin. But I think with their solid outlook, that's where they're kind of getting a little pump. And here's what you have to look at. If we go to Target, their PE is 15. The forward PE is 12. The biggest comparison you can make is look at where Walmart is. Now, Walmart's just doing a much better job. And this is your deep dive. I won't go into this deep a dive on the podcast. But if we just go over here to Seeking Alpha and you look at the peers, and you look at the market cap, employees, Wall Street analysts, Target, here's Walmart Mexico, WMMVY. Wow, why did they put that in? Dollar General, you look at the performance. Target's the bottom performer other than Dollar General. I mean, and Dollar Tree, even BJ's is beating it. BJ's. Walmart is killing it. I own Walmart as well. I don't own as much Walmart as I own Target. I believed in Target so much more than Walmart because of the valuation. But yeah, I mean, the PE is what you, let me see, can I edit these peers? Yeah, edit symbols. We're just going to go, I'm going to get rid of that, and we'll go Walmart. Because that's the only one I want to compare it to. And so you can see, look at the 1 year, 21% versus Target losing 36%. You can see Walmart has a buy, and hold. Quant ratings, you can see, I mean, Target is just down there. Quant rating factors, you can see the valuation of Walmart is D. The valuation of Target is B. It's been beaten down so much. The problem was growth. The problem was momentum. The problem was their earnings per share revisions. Total return, dividends, you can see 3.97% yield versus a 1.3 on Walmart. So you're getting paid more to hold it. Dividend grades, you can see that they've got an A. Dividend consistency, both have A+. The valuation, here's the PE non-GAAP. I mean, look at how much lower all of these measurements of valuation are for Target. Now, growth, that's where you're getting killed. This is where you're getting actually killed. And Walmart, look at their solid growth. So gross margin profit, Target, they just announced 26%. Walmart is at 24%. That's because Walmart sells a ton of groceries. EBITDA margin, both at about 4%. EBITDA margin, 6.98. Net income margin, 3.19. So Target's turning things around. The performance is just horrible. Short interest, 1.47 on. So I don't think you get rid of it, Zephin. I don't think that you add to it. What I'm doing is I'm just holding. It is beaten down too much. I think anything below the 130 point, I think you just hold, and hope that it turns around. Yes, I don't think Bradley likes Tesla. Scott, I don't think he likes it. I'm going to look at the Qs. Wah, wah, wah. Did I post that weekly? I think I posted it yesterday. Yeah. Yeah, I think you'll be fine, Zephin, but we're all just guessing here. I think my price is 111, so I'm not that far off from you. Again, with Target, I think it deserves the $250 price more than it deserves the 110 price. So you take that in half, it's about 170. And I think, we were trading at about 150, and I thought it was going to go to 170. So I just, I don't hate Target. I hate the management of Target, I should say. That's where I just hate it. Let me see if I have Michael Burry in here. See all results for Burry. Yeah, there we go. We'll put that in. Management sucks. Yeah, I mean, they should be fired. Honestly, they should all have been fired much long ago. If I did my job that poorly, I would be fired. Yeah, they can. I mean, board of directors is the biggest joke in the world. Unless you have like Nelson Peltz, who wants to get on the Disney board, and you have a hostile guy. But it's made up of friends, and they're all friends. So, Okay. I'm going to hit record. And so, good morning. It's Wednesday. It's Hump Day, November 15th. And you'll see, if you're watching on the video, you'll see in the upper right-hand corner, I got the chat of the live Facebook. So you guys can see what people are asking me. I usually ignore it, so I won't see it. I'm going to try and keep this one short. And the reason I'm going to keep it short, I had a fantastic hour and a half discussion with Jason yesterday from TrendSpider, Jason Krutsky. He went over an Apple strategy that is an hourly Apple strategy, so it even gets you under the 65-minute. Fantastic results. To the point where I think he's launching it as a trading bot. So you'll see that. I'll have a link to the strategy. We'll have everything out there. I'm going to edit it down so you don't have to watch an hour and a half. There's probably maybe about 45 minutes that we can do. I'll probably cut it into shorter sections. I think we looked at Apple. We looked at Palantir. We looked at SMCI. We looked at Amazon. We looked at several. And the format of the talk is just, hey, we're going to go over stocks like I usually go over stocks. You guys tune in. You hear me go over everything. And then Jason's adding in the other features that TrendSpider can offer you. Some of the auto-fib stuff, some of the other stuff. He is an absolute master at TrendSpider. I was amazed. I'm sitting there like a little fangirl. Oh my God. You'll see that my reaction of my face is just horrifying. I wish I could take it off the Zoom. I may put a big block over my face in the video. But how did we do yesterday? This was the face-ripping rally that Tom Lee had predicted on Monday night. So hopefully you're in. Hopefully you're not sitting out of this market. This is the type of market where when you hear, you've got to be in it. This is one of the 10 days that you need to be in the market in order to make money. So I'm getting a lot of questions about what I'm currently doing, where are my moves going. I'm sitting here. I'm literally just sitting here. You can see I think I posted this on Monday or over the weekend, but it's a weekly chart of Qs. And we've got about 5% to all-time highs. If you got in at the low on October of last year, you made 60%. It's about buying during this period. It's about when you feel uncomfortable, saying to yourself, I've got to make this work. And I believe that the NASDAQ, the Qs, is going to go up. Now, if you bought TQQQ, you're up 120%, or I'm 3 times levered, so you're up 180%. So that was a fantastic. You can't time it. So say you got in here and you had FOMO in August and you bought in at 324. You're still up significantly. Let's see. Say you bought at the highs here in August of 2022. You're still up 20%. That's 20%. You only have 5% to reach to the all-time highs. Now, I do think those all-time highs are going to be tough to get. The all-time high of about 408 on the triple Qs. You're having a MACD cross-up, so we're still in a bullish move. Now, for me, this is pretty clear. Start buying here at about 313. The 50-day is moving up. It bounced off the 200-day. We're still in a positive momentum. Even if you bought, if you follow me on Savvy Trader, and let's just go down to Savvy Trader here, because if you follow me on Savvy Trader, you know that in June, I said, let's start a core portfolio of the 35, 36 names that I follow, and let's just buy at the high in June. And let's compare to SPY. We'll compare it to SPY, okay? The core portfolio, the even weighted names, they're up 4.96%. The S&P's up 2.4%. That's buying at the highs. If we compare it to the Qs, the Qs are up 5.23%. The core portfolio is up 4.96%. So I'm underperforming the Qs, but I'm beating SPY. That's always been my goal. Is since I started this podcast, before I was always looking, hey, let me beat the Qs. Now I just want to beat the S&P 500. And that's kind of hard to beat, especially in a market like this. You can see SMCI was up 14% yesterday. So that core portfolio, if you want to follow it, it's free, savvytrader.com. You can go over to my Linktree, linktr.ee/daily stock pick. You'll find everything that you need to follow from my podcast. But like I said, the triple Qs, we had a huge day yesterday, just huge. If you're in the market, I'd stay in. There's no reason to get out during strength. It's what you want to get out when you find weakness. Right now, we have strength and we have confirmation. Am I buying? No, I'm not adding to any positions. There's a couple that I find interesting, like specifically energy. Energy's been beaten down. So like, Devon is at 45. I still think that's a $50 stock. Disney's at 91. I still think that's a $100 stock. Boeing is at 208. I think you're at 220 at least in a good market on that one. So there's opportunities out there. Just be selective. XLRE went nuts yesterday. Home Depot went nuts yesterday. It was the beaten down sectors. And what that means is basically it's broadening out. So while it was tech, it's now broadening out, which means we're in a significantly upward market that has momentum. Don't get FOMO. Understand there will be opportunities that you can pull back. SMCI, I've been pounding the table since 260. Add to this one. SMCI just broke the 200-day at 276 in a violent fashion. It's at 298 right now in pre-market. It is up at 300. If we break 300, okay, during the open market session, and it's likely we will. It's up at 298. It did it in pre-market, but I wanted to do it in the open session. If you break that, I think that 345, 350 gets filled. So I don't think the valuation of SMCI is not crazy. If you go over here to FinViz and look at SMCI, the valuation, the forward P is only 14. If NVIDIA just crushes their earnings, and they are expected to go crush their earnings, I think SMCI goes up as well. And the forward PE of NVIDIA is 29, just double what SMCI is. This one will trade in tandem with NVIDIA. So if you want an opportunity, I think SMCI is a better opportunity because NVIDIA has just run. It's hit 500 in the pre-market. So you're at 499.25 right now. This one was up huge yesterday. So expect this one to probably just run into earnings. There's no stopping this. 30% of his $1.6 billion short position he didn't lose 40% of the position. He lost 40% of the premium. So it's not like he lost the entire amount, but he was a big loser on this position. So it said that he got out of this one. This is kind of rule number one. Don't listen to a douche on the internet. When he said sell, he put out a famous quote that said sell. It was a tweet, and he deletes all of his tweets. Let's be honest. Michael Burry has called the last 60 of the last 2 big drops in the market. So don't listen to a douche on the internet. IWM was up 5% yesterday. Now, the levered ETFs would have taken this to 15%. If you had any of the levered ETFs on the IWM, this is the Russell 2000. Look at this move in an index, 164 back on October 31st. So November is a strong month. You had this shoot up, and then we had some doubts whether this market was really good. And then you had the CPI number come out. This one just shot up. I mean, that gap between 169 and 174, like I say, have some patience because there's gaps. It's filling these gaps. I think we have probably 180 in the works for this one. It's trading at 178. But the small caps went really crazy yesterday. Now let's talk about Target. There's an article, some of the biggest movers in the market today. Target shares soars 15% in Q3 earnings, surpasses consensus estimates. The company's operating margin rose to 5.2% from 3.9% a year ago. The gross margin rate also demonstrates substantial growth. This is the return of retail to Target. So I think Target is probably a decent bet here. Like I said yesterday, it was a risk reward. You could take the risk. I wasn't one taking the risk. I am still holding Target. I think I sold some at about 115. My average price is about 111. I'm not adding to Target. I'm not getting FOMO. I do think that Target is probably a $220 stock just based on valuation. The problem is the management. I still don't trust the management. So am I adding to this? No. I would like to see this downward trend change. We talked about the long trend on other stocks. Here's a weekly of Target. You still got a negative 50 day. You're going to wind up opening up here with confirmation above the 9-day. That to me signals, okay, maybe we can start doing it. But look at where you've got so far. You've got lower highs. Lower highs just means a downward trend. We need to change that trend. That death cross right there in March, that death cross just signaled, hey, we're going from 160 down. And you had nowhere else to go but down. If you look at Target, when the world was shut down, Target was trading for $99. The world was shut down and Target was trading for $99. And it immediately, in the aftermath, just shot up to $264. Do I think it's at that $264 again? No. I think this portion right here at about $220 provides you pretty good support. If we pull it back here and we're going to go back to, let's just go back to the pandemic. So if you look up here, you've got the biggest chunk of volume support is between 147 and 170. That's where people are holding it. Right now, jutting out here, you still have a huge level of support to get over at 132. You're heading into the empty volume zone. And those volume zones have to add it. What's going to happen is exactly what Zephan said on chat earlier. People are going to be, who bought at 130, are going to say, you know what? If it hits 130, I'm going to sell it. And you're going to have an enormous amount of these people selling. And that's going to put some pressure on the stock. So I want you to just hold it. If you believe in it, it's going to be a painful one to probably hold because I think you're coming back down to about 115 or so. But I do think, personally, I'm just holding it. I'm not getting out of it. So other movers in this one, Zim, if we want to look at this article, you can see JD surging over 5%. Maybe the coming back of the Chinese consumer, because if we look at BABA, that one's up as well. BABA is up to let's see, 3% in the pre-market. Like I said, we're still in a downward trajectory on this one, but it's starting to turn. and right before earnings. Their earnings are after the bell today. It's probably going to be November 16th. Yeah, it's tomorrow morning. So it's overnight is what BABA announces. So if you want it, get into it. JD announced their move. The other one that I noticed was Zim. I think I used to get a lot of questions about Zim. Zim is a shipping company, and when shippers had their way, they had pricing, and they could basically tell anybody that needed shipping stuff, they could name their price. And that's when you got to this $60 price. Right now, you have no confirmation. You have no reason to buy this one. If you are trading Zim, kudos to you. But there is no reason to get into this one. Absolutely no reason. This one could be going bankrupt. That's how bad their quarter was. Let's see. AXP got an upgrade from Barclays. This is American Express. They said it's undervalued. I tend to agree. This chart does not look like the Visa and MasterCard chart. 100%, it just looks like a bad chart. But that 145 might have been the bounce. And as it gets to a positive 50-day, you've got confirmation. I see some gaps up here, specifically between 166. If you think the business consumer is back, this is 100% absolutely a buy. Let's look at Berkshire. Berkshire Hathaway, they announced they exited GM, exited Activision. The reason they exited Activision is because Activision was sold to Microsoft, so they just got a bunch of Microsoft stock and money. But that was a great trade. The key point in this one is this last bullet point. As of September 30th, 78% of Berkshire Hathaway is in American Express, which we just talked about, Apple, Bank of America, Coca-Cola, and Chevron. Those are stocks that you want to hold. They are underperforming. Coca-Cola is underperforming. Chevron is in the energy sector, has just been killed. Bank of America, I think, is a $30 stock. It's trading at $29 right now. Apple approaching all-time highs again at about 198, 199. I think I trimmed some at 195 or so. But like I said, American Express beaten down, opportunity there. That's what you want to take advantage of, is to read these articles. Again, Seeking Alpha is such a great one. If you want to read, there's been some questions about short positions. This is from Ross Cameron, who's a warrior trader, famous for taking a $100,000 account to over 10 million. Significant momentum trader. He trades high volatility stocks, trades options. He does it live on YouTube. It's warrior trading. I would not pay for his system, but I would watch him. He teaches a ton of stuff. His course, anything that you buy from him, I have no doubt if you want to pay for it, it's probably worth it. It's just expensive, and Ross is he's a great trader, super knowledgeable. This is a background of a short of a biotech company, BPTH. It was an $800,000 short. It lost the guy $16 million. If you want to read that one, solid learning right there. So I think it's an opportunity to get some knowledge in. W. Cred from Spotify asked, where do you park your money that's not currently in equities? I hear about people getting 5% while they wait to catch the market moves. Great podcast. Really appreciate all the work that you do. Well, you know where I park it? I park it, my Webull. If you go over here to Daily Stock Pick and you click on this third link, join Webull, you get 5% on your money. It's paid out daily. So you can see if you've got cash, they just automatically pay you 5%. That's part of the benefits of Webull. Earn 5% APY today on your idle cash. That's 5%. So W Cred, there's no reason. You should basically be clicking on this link. You get 20 free stocks when you click on that link, and you get 5% on your cash. The other thing that I do, if you're not in Webull, I have Fidelity as my main brokerage account. And Fidelity gives me 5% through a bond fund. It's about 4.9. It changes on a daily basis, but what you want to do is you want to go into Fidelity and you want to look at all of their bond funds, and there's a 7-day trailing rate. But all of these banks are talking about, 4.99% on SPAXX. That's a 7-day yield as of 10/27. Click here for the current yield. You can take a look at all of this stuff. They've got tons of bond funds that you can look at. And it basically makes you 4.99%. Webull gives you 5%. It's just a matter of where you're comfortable with doing it. If your bank or your brokerage is not paying you on your idle cash, get the hell out. Robinhood, I don't think pays you on your idle cash. They might, but I'm not a huge fan of Robinhood. Kathy Wood's a big fan of Robinhood. I'm not. I do think that Robinhood helped trading tremendously. I think they also hurt trading with GameStop, but that's another Netflix documentary if you want to watch it. I think it's just Google GameStop on Netflix and you'll find the documentary. Fantastic documentary, by the way. But you can get 5%. Yeah, that's exactly what you're doing. WCredit, if you are not getting 5%, you're crazy. You can buy, if we go over here to on Fidelity and we go to fixed income and bonds, you could buy a U.S. Treasury for a 6-month Treasury that gives you 5.42%. That's tax free because you're not paying taxes on U.S. Treasuries. You can buy these on the market. You can buy a 2-year at 4.92. The 3-year just went to the 10-year just went to 4.52. But that like a couple weeks ago, that was 4.9%. These things are trading like penny stocks. They don't go up and down like this. So essentially, your worst case scenario is that you get 4.52%. And after 10 years, you get your initial investment back. So you can buy those things. I just tend to like 5%. And so I park some cash in Webull. I have $1,000. Let's see, I put $1,000 into Webull at the beginning of the year. I am now at $2,576 as of this time. So you can remember a few weeks ago, I was at $2,400. It's not that I got bonus stocks. It's that, I've invested in Apple. I've invested in Google. I've invested in Boeing. I've invested in TQQQ. I've invested in IONQ. Let's see, my TQQQ right now. And I do it every now and then. It's not big buys. I think I've got $200 in there on TQQQ. I'm up 30% on that. IONQ, I'm up 15% on that. Apple, I'm up 40% on Apple. So it's just about and Apple's the biggest position that I have. That's about $1,000 of Apple that I have in Webull. So I tell people it's like my savings account. When it dips, I just buy. And I buy one share. Or, I buy $100 worth. Whatever I think, I can afford. So there's where you can go for your cash. I do think it's an opportunity for you to get into Webull. I would suggest Webull. I would suggest using that link, getting into Webull, and it gets you 20 free stocks plus you get the 5%. So if your money's not earning, make sure that you get it into a place where it'll earn. Now let's talk about scans. Scans are ones, if you get TrendSpider, you can do the scans yourself. I provide you the link to do the scans. And you can find these. I provide you a link for the daily stock pick core portfolio. You can scan the core portfolio. You can create a list with your own brokerage holdings. You get this covered call. You get the energy names. You get the levered ETFs. You get the low cost Vanguard. You get the spider sectors. You get all of that. And you get the scanners where you can do it. You get the scan for the 65-minute. You can say, hey, I want to create an alert for a 65-minute. You get a scan for a 4-hour. You get all the tools that I have when you sign up for TrendSpider through this link. This top link right here on linktree/daily stock picks, linktr.ee/daily stock pick. The link is down below. But here's the prices. And Elite is what you want. You don't want the lower portion. You want Elite. You don't want Essential. You don't need Elite Plus. If you think you want to trade with Elite Plus, you can. But Elite is really the sweet spot. And it's $43.45 per month. This is the Black Friday sale. You're saving 45% because it's usually $79 per month. So if you want to go for a month, it's $43.45. You get a 7-day free trial. This one is a year. You're saving 60%. It's $31 a month. It goes down to it's $382.20 per year. You do get a 7-day free trial, so you're not charged until day 7, and you're charged $382. But if you've watched me a long time and you're just like, hey, I just want the algorithms, I just want the scans, it's $296. And I'll say it many times on the call with Jason. You'll see it if you watch it. That 200 big enough trades. I put $20,000 into Amazon right before earnings. That trade alone, 10 times, $20,000, 20% gain, that's $4,000. I was able to time this because of TrendSpider. I looked at the chart. I looked at, I said, hey, it's just down too much. And I looked at the weekly and I said, here's what I said to myself using this chart. I said, right before earnings, you're back down to where you were in October before you started that deep drop. I didn't think we were going into another deep drop. And I thought that those October lows were probably about right. So I said to myself, if I go down to 115, I'm not that worried, but let me buy it here. And I'm up 20% on that one. Again, that's what, $4,000? So the cost of TrendSpider is nothing. The cost of Seeking Alpha, $50 off, it's $189. For less than $500, I've got two tools that provide me the tools that I need to make money. And that's essentially what I do. My system is my system. Again, I have years of trading, so I understand my system, but it's about creating your system. So let's go over the scans. And what the scans are stocks that in the 4-hour algorithm provide you a buy opportunity. Here's PXD, 236.59. You're trading at 236.91 in pre-market. I don't know that I'd necessarily get in here because remember, you get the special dividend, which is great. It's about a 1% yield, I think, 1 or 2% yield. Just for this particular one, not an annual. It's you'll get 1 or 2% off your money if you buy it. You do get 2.33 shares of Exxon when they complete the transaction. With Exxon trading at 104, this isn't a horrible price. 236. I think as Exxon moves up, this will move up. This is just going to trade with the price of oil, just like Exxon is. So PXD has a buy. Now, Target has a buy on yesterday's candle, 110.67. You ain't buying it for 110. Right now, it's at 126. Like I said, I am not doing anything with Target. If you think the Target's turning around and we've hit a bottom, continue to go. Personally, I would say wait for the weekly. Wait for the weekly turnaround. But Target is in this list because it does have a bullish sentiment on the 4-hour algorithm. MPLX, this is another oil company. I bought it for the dividend. You will see this one kind of bounce around here to 36. It is not one that you buy for a long-term kind of, oh my God, I'm going to trade this and make 10% right now. You can see this is the weekly chart. Just an upward trend with a solid 8% dividend. Let's look at MPLX. Let's see, 9.10. So you're making a solid dividend with an upward trending stock. It's not going to bump 10%, but it's a solid movement in this one. Let's see. Right now, let's see, $35.70 is the buy. Now, understand my algorithm, if you trade this one over 2 years, there's 26 positions. So that's about one trade per month. You lose 3.97%. 3.9%, I'm sorry. It's down here. If you bought and held, you've made 14% plus you've made that 9% dividend for 2 years. So you've made 18% plus 14%. Solid gain from an oil company. SPG. This one is Simon Property Group. I told you before earnings about 110. I thought 110 was a solid price here. 103, even better price. I thought anything around 100 would get blown away. It did. You're at 120. This is secondary cross up because my algorithm is based on a MACD. Anytime that MACD crosses up, I'm going to get an alert that says, oh my God, this is one that is in a solid upward trajectory. The gap that you're going to fill is 123. GE Healthcare, GEHC. This is a rather new stock. So if we go to a weekly, we don't have a 200-day, but you're just crossing the 200-day. That 50-day is starting to move positive. Do I think 72 is crazy on this one? No. I think you get back up to this $80 realm. So I think you do have at least 10% in this one. This is a solid company, great earnings. Rivian crossed up. Rivian, I think it's a $30 stock at some point in time this year. I think it's a solid $30 stock. I think there's $16.74. What you have to know about Rivian is they are not making money. They will not make money. Earnings have already passed, so the catalysts are out. But I like that stock. ARKG, I know nothing about genomics. Kathy Woods knows a lot about genomics. I'd be a little bit careful of this one because just ARK funds in particular, I'm not a huge fan of, but $26 is the buy. You're at $26.38 right now. So ARKG is a buy. I did forget to go over for yesterday, SOFI. I put it in the newsletter, my analysis of it. I just don't know what the catalyst is for this one to continue to go up. You had your earnings. I think it's a $10 stock. The problem with SOFI is if you go over here, the forward PE is 115. Super expensive, still losing money. The second they start making money is when you want to turn around and be in this stock because it's a $10 stock. It's not going anywhere. They're not going bankrupt. I don't think they're going to dilute anymore. They have cash on hand, $3.90. They have 933 million shares. So they're not losing enough money to actually go out of business or to dilute you. Neither was Rivian, but they wound up diluting a little through bonds, not through the stock. Cisco, solid tech play. I mean, it's under its 200-day. It's above its 50-day. You got some solid movement there. You got earnings coming up. I think it's, today after the market. I think they'll announce something good. So, 53, it's not crazy overvalued. The PE is 12. Is 17. The forward PE is 12. So if they come out with decent growth again, I think you're seeing this $58 pop. I think you could see a 10% move in this one. But again, earnings, I think it's going to be a little hard. 3M, I'm not a big fan of the company's ethics. So I'll just say it's been on a solid move from 89 to 94. It's been a beaten down stock. On the weekly, you still have a severe downward trend. It just showed some momentum, so I thought I'd bring it up. Intel. Intel is a company that it's just been soaring. I mean, the buy was 35.47 here. You're at 39. That buy was October 30th. Again, buying at the end of October, beginning of November, solid play just because November was a solid, seasonal month. But it's up. It's overbought at 65. The MACD is well up here. I worry about that a little bit, but you do still have confirmation. If we look at this from a weekly perspective, you're not even at your 200-day. So your 50-day is now moving positive. Your 200-day is at 45. It's still moving negative. But if this one starts to take off, you could have a golden cross and you could continue up here towards the 50s. So the valuation would be crazy at the 50s, but you could do that. Kraft Heinz is one. Sirius Logic. This is satellite radio. This one has been beaten down. It is up 12% in pre-market. Didn't know why. Found out Berkshire Hathaway bought a ton of shares. I've been burned on this one before. This one has a solid base here at 619. I just don't see people paying for Sirius when you have Spotify, when you have Apple Music. I just don't see it. Honestly, I just don't see it. One that I want to point out is DPST. Yesterday, DPST was up huge. It was up big. The regional banks, you can see, we went from about $50 to $61. In pre-market, you're down 0.08. It's at 61.22. Market just opened. So you're up here. You've got a gap down here. I would be worried about this one, but regional banks just took off yesterday. Right now in the market, if we go to Seeking Alpha and we can look at the market, let's see, the markets will pop up here. Seeking Alpha, you can sign up for free. You can use the paid version. I love the paid version. I honestly, the two that I think are worth it are TrendSpider. Like I said, under $500 for the year. You can see Dow's up slightly, 0.31. So it's we kind of came back down. Yesterday we had such a big market. We've kind of come back down. Let's look at SPY. SPY is up. Let's see, 0.33. So you just you got this gap from yesterday between 441 and 445. You're at 450. I would expect today to be a little bit more tame, but it looks like a ton of stocks are taking off. I would expect a little bit of a profit taking maybe in the afternoon. SPY in particular, I think you got this gap within range 453 to 455. So if you have any questions, you can hit me up. I had a bunch of people email me. Use the link tree, linktr.ee. You got the TrendSpider sale, which we went over. Seeking Alpha, you get $50 off. It's $189 for a year. Fantastic, fantastic service. You get their quant service. You get to import your portfolio, and you get a portfolio score. I can show you my 2 portfolios. I've got the core portfolio in here, which is the main one. This one gets a score of 3.74. It actually rates each stock for you, and it alerts you when you have a weak stock. What I really like about this one is when you import it, it will alert you, watch out, you have one stock at risk of performing badly. It's a 3.59% out of 5 score. I really, really like Seeking Alpha on that one. Webull, like I said, 5%. If you're not getting 5% on your join Webull, use that link. The Daily Stock Pick newsletter. This is a free newsletter I put out with all my notes, with the charts and things. It's free during the week. It's paid on the weekends. I'm going to up the price here soon to probably about $100 because I do have enough content in the archives. So it'll be $100 a year, $10 a month. So you save basically 2 months for free when you do the yearly. But there's that. If you're paying anything more than $25 a month for your phone service, go over here to Visible. It is let's see, check out our plans. I'm hearing a backup of a truck. But it's $25. That's what you pay. There's no fees on top of this. It's $25 and $35. So if you're paying anything more, you're crazy. You're out of your mind. Use that link. If you're buying a Tesla, buy it here. You get $500 off and free full self-driving capability for 3 months. The AT&T Fiber link, I have 1 gig service. That is why I look so pretty, even with my cut hair. It is 1 gig service at my house. I am a big believer. I am an ex-executive at the cable companies. And I will tell you, I think fiber's better. Cable does share their wires, and particularly I'm on a cul-de-sac, and I know a lot of my neighbors have charter service, and charter service, when I've had it in the past, it does bog down, during prime time. So watching those Thursday night football games on Amazon Prime, I'd rather have 1 gig service. Savvy Trader we talked about. You can find anything else. If you want to tip me, the tip stuff's down there. It's the holidays. Say I love you to your boy. If you want to email me, my email is up here in the upper right. So watch out for that Jason video. It's coming out. I'm going to go and edit it. Hopefully this one's a short one. I probably talk too much. But again, if you have any questions, hit me up on any of the socials. Okay, talk to you later. Bye. Okay. Let's see. What did I miss? Definitely. I don't disagree with you that Target could go back to 110. So, I think I found the new Kramer. The guy's on reverse risk. Yeah. Yeah. Those guys on risk reversal, they're a good. Dan Nathan, Guy Adami is not always bearish. He is bearish right now, and he's got good reason to be. Remember, there are good reasons to be bearish. They do bring up good reasons, but you've got to understand. Yeah, Zim was a Tom pick. You've got to understand when the trend drives the market, and so when you're in a trend, you don't want to get out of that trend. Don't fight the Fed. Don't fight the trend. I don't know, Pavan. I'll worry about DPST. I mean, the regional banks are beaten down so much. If we look at DPST, and remember, it's a decaying asset, so long-term, you really don't want to hold this. But that trend right there, that trend line that I drew way back when, I think I drew it right here when it was up. No, I drew it probably when it was down here. And I said, that's the trend line that I think we get back to. Now, the problem is if you buy it here and we continue down, you're just following the trend line. If for some reason we get some type of pop and the regional banks are good, I'm just not a banking guy. So There's tons of Russell levered ETFs here in TrendSpider. You get access to this list. Let's just see. You've got SMDD, which is the mid cap 400, SRTY, which is the short of the Russell 2000. You've got UMDD, which is the up of the Russell mid cap 400, URTY, which is the upward triple levered ultra pro of the Russell 2000. You've got FAS, which is the financials, I think. Yeah, financial bull. And FAZ is the down. That's the financial bear. You've got HIBS, which is the S&P 500. PSQ, which is process short QQQ. You've got UVIX, which is the 2 times long VIX futures. And the VIX is just crashing. You've got FNFG, which is FANG index 3 times levered. This is the microsectors index 3 times inverse levered. So it's bear. You're way down there. You got TSL L, which is the long 1.5. So in this list, you got tons. So if you're in TrendSpider Pavin, you can look at that one. Which stock? What was I talking about with oil? Probably Devon. Sam, you can't interrupt me while I'm on my flow. That's like telling Eminem, hey, stop the song. I didn't understand your lyrics. XOM, they had that huge insider buy, but it's trading on the price of oil. And if you just go over here, I think oil should be $90. And I think, OPEC and those guys think that it should be $90 as well. Crude oil is at $77. So, you do whatever you think is right, but I think 104 for Chevron, for Exxon is cheap. We can look at Exxon, some of the financials. The PE is 10. Let's just look at CVX. These are the two. They're at 10. They're both at 10. So Chevron came down. The reason Chevron came down is because their PE was just too high. It's now in line. So I don't think either, year to date, they're just not performing. Energy's just not doing well at all. You can look at XLE. XLE is down 3%. So, yeah, TJX. Did they have earnings already? I think it's this week. I know it's this week. I just don't know. Yeah, they had earnings. It's down 3%. Oh, MPLX. That's it, Sam. MPLX. It's on the core portfolio. It's there. You should be subscribed on Savvy Trader or on TrendSpider, one or the other. But MPLX is the one. I've had this for years. I bought it around COVID. So here's the deal. Here's the reason I got into MPLX. It was around this time, at about $15, somewhere in that neighborhood. And the rumor was that, it was probably around here, around 12, 10, I think, in that neighborhood. These one, and you can see, the periods are huge. This is a 27% candle during the week of April 20th, 2020. 20% up, 27% up. The low was $13 and the high was $17. These were huge moves in the energy market, and MPLX had rumors that they couldn't keep up their dividend. But the financials didn't back that. The financials said, they could keep up their dividend. They were still selling enough, and they had enough cash reserves. You can see they lost 53 cents per share, but they went right back to 58 cents per share. So around this time, I think it was around 14, down here at, let's see, they got to $6.87. And so I continued to hold it. It got that golden cross. They've had some fluctuations, like they went down to 28. It's not one that I trade. It's just one that I hold. And there are some tax implications on the dividend, so be aware of that. But it's MPLX. MPLX. It's a great. In my mind, it's just putting off the cash. You can see pre-COVID, around 2019, it was a $25 stock. It may be overvalued at this point. I don't watch it that much because I just hold on to it for a 10% dividend, 9.1810. PE's around 10, forward PE's around 9. It's up 8% year to date, unlike most of the energy stuff. But it's oil and gas midstream, and they just pump oil, and they basically make the money. And as they cut costs, you're getting a nice special dividend. If we go over here to we can look at MPLX, and we can look at the dividend history to Seeking Alpha. November rain. Dividend 9.52 yield forward. We can look at the dividend history. This is what you really want to look at. Dividend history right here, 2023. Ex-dividend date 11/2. I think I just made $4,000 on this one. I have a lot of it. And so, yeah, I get a nice dividend every quarter on this. It's not bad. But you can see the dividend, I mean, it's been solidly up. That's why I say I like this stock. At $35, let's see what the average analyst is, $40. Your upside's not huge. I think you trade between 30 and 40 on this one, probably in the years forward. So you're not going to make a ton of money off of it. Yeah, Exxon and Chevron, I mean, they're going to trade, and they've said this. Exxon and Chevron will trade with the price of oil. Sam, I think you're in your 20s or something. IRA, I don't know that I'd go with something like MPLX. I'm 53, and I've got MPLX in my IRA, and there are tax implications. Because it's paid as a dividend, and it's a master limited partnership, your brokerage firm will send you a letter in August, and they will pay the taxes if it needs to be. But I have some in an IRA, and I have some in a brokerage. Because the taxes happen to be from a master limited partnership, if the taxes come from if the dividends come from oil, you're taxed perfectly fine. In an IRA, you're not. But because there's some sales of assets and things like that, if it comes from other things, then you have to declare portions of that dividend as taxable. So understand that I don't know that it's a great one in the IRA. I think I've been drawing down on the IRA one, but every time I draw down on it in the IRA, I just buy it in my brokerage. QCLN, I still hold. Yesterday was a good day for QCLN. It's the first one in a very long time. The problem is that they own so much solar. It's a trust, and we can look at it over here. Solar was up huge yesterday. It was up enormous yesterday. And so QCLN was up yesterday. I like you can see September 20th should be your preferred bet if you're interested in clean energy. This is why I bought it. It's just not very good. And you can go over here to the holdings. You look, it's got Rivian, it's got Tesla, it's got onsemi. But here comes the bad stuff. First Solar, horrible. Enphase, horrible. All of these other ones, horrible. And this top 10 makes up 57%. So you only have 65 holdings. And it just, portions of this have been brought down because people just don't want to buy it. So the momentum of this one has been, they just don't want to buy it. The fair value of this one, I don't know. Does this one tell me fair value? Let's see. Ratings, holdings, analysis. No, comments, news, release, related analysis. Holdings. Let's see if it tells me the value of their holdings. Let's say QCLN fair value. Let's say find the fair value of an ETF. How to value the ETF? Anyway, let's see. No. You know what? We're gonna go ask Bard. Let's see. We're gonna train it first. And we're gonna say, what do you know about details about the holdings in the ETF symbol QCLN? There we go. Okay. What price is QCLN trading for? $36, which is right. There we go. What is the, based on the holdings, what is the fair value of QCLN? There you go. Market value of each holding as of November 15th, QCLN is $39.19, and you are trading at $36.60. So buying QCLN, because it's beaten down so much, you basically get $3 in value, in fair value. So, Zevin, I took it out of the core portfolio because it's performed so badly. But at these levels, I don't want to sell it. You know, I'm still holding some of it. I just don't want to sell it. In fact, let me see. I'll tell you if I'm up or down. I probably am down on that one. I've held it for so long. I mean, look, this one was $36. I mean, I probably bought it way back here at $20 or something. Let me see. Listen, it's a solid ETF with solid holdings. So it's not crazy. QCLN, HIJK, LMNOP, Q. Yeah. QCLN, I own currently 780 shares. I am up 79%. My average cost is $20. So it's a long-term buy, but you know, I'm up all that, but think about, you know, had I sold it up here, how much I'd be up, and bought it down here and sold it up here and then bought it down here. So is it in? It's not in the core portfolio, I don't think, here, is it? No, it's not in the core portfolio here. I try and keep all three locations of the core portfolio up to date. That's a hard guide to give you. I mean, I'm holding. And I'm not saying I'm right. I'm just holding. You know, it's not a crazy thing to want to sell. I mean, you're up at 130. I would say if you're going to sell today, sell over 130. If you're going to sell today, do not sell at 129. Sell at 130. Okay. I am going to get out of here. I hope you enjoyed the chat up in the upper right. Well, if you listened to the playback on this, so you can see what everybody was asking. But hopefully you can read it. Probably can't. I don't know. I'm going to have to look at adding in like, bigger, larger versions. So like, maybe I just do this. Maybe I expand it. And then, because nobody cares about, well, let's expand it. And then what we'll do is we'll just shrink it to 3. And we can keep it up there. Yeah. So it'll show 3, and then the upper right. I think you can read it now. That's the key, is you couldn't read it because it was short. Yeah. So I think that one's better. So I'll start including it. But I do think QCLN, I'm not recommending QCLN because I do think, higher for longer just means that those solar companies are going to be down. And QCLN has not participated, even though its largest holding is Tesla at 9.92%. It just has not held up. So, okay. I am out of here. I'm glad everybody, when I'm on that one, you can't even see the chat. But I don't want to block the screen with chat. So, yeah. Yeah, I think oil is down because of China demand, and if China's actually coming back, then I think you'll be fine. But oil in my mind is just a hold. I don't think you buy it. I don't think you sell it. I think you just hold it because a lot of those stocks just give off a ton of cash. So I'm not saying that it's going to beat, technology, but I think you just hold it. Larry. Okay.